right. Thank you, everybody, for joining us here again today. Uh, this is the first Ask the Experts for 2021, and we're super excited, Justin and I, to welcome a special guest today, Jordann Hartzheim with Guaranteed Rate. Jordann, how are you doing?
Hi, I'm doing great. Thanks for having me.
Awesome.
Yeah, welcome, Jordan.
Jordann has some exciting news. I wanted to give her some kudos for that. You've got something exciting happening with your job title over at Guaranteed, right?
Yes, I just got promoted to a full VP, so I am have a lot more independence and going with it this year.
Yay, congratulations.
Very, very well deserved for sure. I honestly one of the hardest working lenders that we're privileged to work with. So congrats, that's awesome. Well, we wanted to touch on a number of things today. Kind of part one, we were hoping to give just kind of a little market update to speak specifically about the first week here in January of 2021. Obviously, lots of current events happened, but housing market is still going very, very strong. So some exciting statistics kind of going into the Madison market here in that first week. Just in Madison, single family houses and condos, we had 37 new listings. We had 64 houses that were physically sold and closed on. Um, 65 accepted offers. So average number of days on the market still keeping very, very tight. 31 days average number of days on the market. I think a very, very primary driver of that is interest rates, and that's kind of another primary reason we had Jordann on today. What are you seeing on the finance side of things, Jordann?
Well, like you said, there's really not a better time to buy as far as rates go. Um, we're still seeing below 3% easily on our conventional loans, and these are all posted daily on my website. If you go to rate.com/Jordann very easy to pull up, but obviously with the shorter terms, we're seeing the much lower rates down to the low twos. And it's really interesting right now. I just have seen several market adjustments throughout the day today that our investors have been repricing for the worse and for the better. So we're still seeing a really good time, historical low rates. However, we're starting to see, we have to be aware of strategically how to lock in at the best point possible, right? Because when we have how I think of it is like a bouncing ball, right? So we want to have things set up as a buyer or even refinancing to get the ball at the lowest point on the scale. And so, yes, still lowest rates across the board. We're going to be seeing low rates for a while. But, again, strategically, that saving a quarter percent could save you quite a bit in the long run if you plan on staying in that home.
Question that's amazing. Yeah, that's a conversation that always comes up, and especially with first-time home buyers, is when should we lock in that interest rate? So it kind of brings up two questions that if we could get an answer, that's amazing. Um, how do you kind of advise your buyers of when the best time to lock in a rate is? And second portion of that, what is an average rate lock? What is the typical length that you can lock in that interest rate?
Yeah, great question. So most lenders you can lock in 30 to 60 days is average now with COVID kind of extending that. However, with my company, we actually have kind of like a lock and shop type style. So If buyers are concerned with rates exceeding what they would like to pay for a rate, we can lock it in prior and go like up to 160 days, I think it is. Don't quote me on that, but it's quite some time to give the buyers time to look around safely. Um, and to your other question, when recommending what buyers should do, what I think it's twofold. So obviously you have to have a really well-educated expert that can see what's going on in the market. And so we every day when I come in the office, I'm looking at what the 10-year is doing. I'm looking at what the experts are saying, and my company also has recommendations. So we have all of the expert resources here available to let us know like if rates are expected to be adjusting, to be repricing. And then I think the biggest conversation that I have with my borrowers is that if you like what you see right now, lock it in, because it's not worth the risk of having your rate increase, your payment increase, and for the savings that you would get is very little every month, maybe $10-20 a month. So if you like what you see, I recommend locking in, and again taking into consideration the expert resources that we have in our toolbox.
Makes perfect sense.
Awesome.
For sure. It's kind of the bird in the hand adage, right? The Fed operates so independently of anyone really. They're going to kind of do what they want. So we know what we know today, and yeah, I mean it's unbelievable time. Less than less than 3%. That's it's crazy.
It is crazy. It's a great time to look at all of your different options. Even if you're not looking for your first home, you still want to rent, look at an investment property. It's a great time for that too. So, yeah.
I always put it in perspective. I purchased my first house in 2004, and way back then, 7.5% was like a great rate.
Oh my gosh.
Now it's crazy.
Yeah. When I first started, we were doing 5%, and we were expecting to see it to continue to raise. And, things like this happen where you just can't predict what's going to be happening. So it's a good time to be along for the ride. It's been fun.
Yeah.
Have you kind of seen an increase in applications of people, interested in getting that pre-approval?
Um, I don't know if I've seen necessarily an increase in applications. I think a lot of people are actually late to the game, in my opinion. So having those conversations, we've had a lot of people asking questions, but I think where the real difficulty lies is that most people don't think they can get qualified when they can. So what I've been really trying to do is to educate as many people as possible, whether that's buyers or, my best agents like yourself, where we're just having these conversations of what is actually possible, and getting them set up as quickly as possible. So a lot of people are wanting to take advantage of the market right now. And also the home values, and I'm sure you can speak into this, the home values are so stable in Madison that we're really fortunate to have a really good kind of holistic picture right now with financing and purchasing opportunities.
Yeah, for sure. And I was just wondering, you mentioned applications. How do you feel like the process? Like, is it lengthy? Is it difficult for people to get that application in and get the pre-qualification?
That's a great question. I'm glad that you asked it. So it's very, very easy. It takes 10 to 15 minutes. We have the only digital application available. And there's probably 5% of the population that does not like that. And for that 5% of the population, I'm happy to hop on the phone and do it for them. But it's really awesome because it goes through very quickly and briefly, gets all your information. And what we can do as far as getting to that next step of pre-approval, when your buyers or when you go on to apply, and I've done this myself, it will automatically tell you if you're approved or not to a certain amount, if the qualifications are there to do so. Otherwise, what it will do is it can automatically generate your assets which typically you have to have every 30 days to get pre-approved. It can kind of be an additional piece of work there. Also, income can be automatically verified. So really, this entire process is taking so much of the work off of buyers who are looking to get pre-approved and into the hands of technology, right? So we have all of these resources, and it's going very quickly, but everything can be done online. We can get all of those documents uploaded. Within 4 hours, I can have a pre-approval letter for people who are really interested and motivated to get that.
Wow, that's
Mhm.
amazing. That's so fast,
Yeah,
and it sounds kind of fun and exciting. I mean, from my perspective, just I'd like to try it out myself. I'm
you
not
can.
looking. I know, just just sounds fun. You just get on there and enter your stuff in the computer, and it tells you. The technology is so smart. It's fantastic. What a great piece you have there to work with.
Yeah, it really is. I'm really grateful. And we also have a tool that is like one step before the application. So some people who are having these conversations and curious about the home buying process and kind of one foot in, one foot out, we have a tool called Affordable. So essentially, they can do the application without putting any personal information in, and it will tell them what kind of loan they can afford, which is kind of cool.
That is awesome. So for that, you just gotta submit. What do you need to submit for that?
You pretty much just estimate and tell them, what your credit score is, estimated
Oh, okay.
income, and then they'll tell you based on that the max that we can qualify you to and which loan program would be the best based on some of the goals that you mentioned.
That's great. So you just for something like that, like with all the application processes, but for something that's just so simple and gives people just a ballpark estimate of what they can afford. I guess the main thing to focus on is just make sure you're being as forthright with those numbers as you are. Don't try to say, you know, I got a 9 on my credit score or something,
Right.
right? If you only have a 7, you just got to be diligent with your facts.
Where
Yep,
would
absolutely.
where
What's
would
that?
a consumer find a link for that? Because that's a really really awesome tool. I actually didn't know that that existed because I think some people are hesitant to go ahead and do that pre-approval. I think there's also, and you can kind of clarify this because it's much more on the financing side, but I think there's kind of a myth that is perpetrated out there that if you apply for that pre-approval, that's somehow going to ding your credit.
Mhm. Yep, absolutely. So the link that you can go to is Loan Finder, LOAN, finder.guaranteedrate.com. And that'll take you right to there. And I can also share it with you.
We'll put a
Um,
link to that in the comments. That's an amazing
yeah.
tool. I'm actually going to play
Awesome.
around with that. That's great.
Yeah, it's fun. I've done it many times. So yeah, and as far as the credit score goes, I did want to touch on that because I think that's a good point too. Um, with the credit score, we actually had a guy from the credit reporting agency come in and talk to us about this, and he said that it's also so commonly worried about what people in that 700, 800 score range. Like they don't want anything to happen. So first of all, it does affect your credit. So I wanted to clarify that, but the max you'd see, the max, he said is about 6 points, right? So, I mean, when we're talking about qualifying, it's not going to be that big of a deal, but also it's temporary. And what they see is that if you're applying for a mortgage, it's not like you're applying for a credit card or something that is really easy to be irresponsible with. Also, I forgot the last part I was going to say. I'll
Well,
let you know if it comes back to
No, but
me.
that makes a lot of sense though. I mean, if you are gonna have your credit a little ding on your credit, if it's 6 points, uh, that's you're going in to buy in most people's life the one of the biggest purchases or the biggest purchase of their lifetime, and so it's not like you said, it's not like getting a credit card or something where you're gonna be using it to buy things. Honestly, from my experience, once you do own a home And that actually establishes a much stronger credit base for you as long as you are being responsible. So, I mean, that's going to do wonders for your credit if you're concerned about that. And so, if you're buying the biggest purchase of your life and you get a small dig on your credit, as long as you're following through with the process, I mean, that shows huge responsibility too. So, I don't think there's a big risk. I guess one question I do have though is on that is if the credit, the pre-approval is good for, what is it, 90 days?
Yeah.
And so what happens after that 90 days when they need to say if they didn't find a house, they just weren't quite ready yet, but then they want to keep looking after that 90 days. How does that impact the credit score?
As far as repulling credit,
Yeah.
it will. I think that the more that you're pulling your credit, it's definitely going to have a stronger impact. Um, but again, I haven't seen in all of the years that I've been doing it having a significant impact on credit. And ultimately, if you want to buy a house and in this market, you have to be willing to do, what you need to do. And pulling your credit is an essential part of it. Right. So, at that point, it's still not going to be like every single month. Your credit's actually good for 120 days. Whereas the
Okay.
pre-approval letter is good for 90. And at that point, if your loan officer is doing a good job, they will let you know prior to the pre-approval letter expiring, and let you know that we need updated assets, income, these
Hmm.
documents that are really important. So when we are ready to make an offer, we're ready to get this thing going into underwriting. So we're not wasting any time, to make sure that you close on time.
Okay.
A distinction that I've always heard with, back to the credit piece of how it might affect your credit score. It's seen as different than consumer spending, right? So a car or applying for a credit card or like a store credit card, something like that. Um, Jordan, as you said, those are much more viewed as higher risk, and mortgage is considered good debt. So that's a portion of what I've been told, anyhow, why it doesn't affect the credit score quite as much. What about down payments? So in terms of trying to help as broad of a spectrum of consumers as we can out there, what kind of loan programs do you have with, like, what's entry level for a down payment?
That's a good question, and it varies is the ultimate answer. And the reason why I'll say that is because there's a lot of down payment strategies that you can do, and depending on which loan program you choose, there's going to be a different down payment required, as well as your own personal financial situation. So a lot of people think that you need 20% down, and that is not accurate. In fact, sometimes having 20% down is not always beneficial to your purchasing power. And so when we're talking about the different programs, there is VA, USDA for rural housing that both have 0% down. So if you are looking for somewhere outside of the city, you would likely be eligible for that, but they do have income restrictions. Conventional has 3% down, and then FHA is 3.5% down. Now, where people have the misconception of 20% down is there is something called mortgage insurance that sometimes can be on for the life of the loan. Now, again, does that make sense to put 20% down to save, 5, 10, $20 a month? Whatever the case may be on that case to case basis. But this is where these conversations are really important to get pre approved as soon as possible, so myself or your loan officer can help you strategize and make sure that you're making your money work for you in one of the biggest investments that you're going to have.
That's Yeah. I was literally just having that conversation with some first time home buyers, And that's another one of those myths, I think, that's kind of out there and perpetuated, that you need that 20% to get into the door, which just very much isn't the case. Um, the other thing, they're trying to play around with, so everybody is like afraid of PMI, right? Private mortgage insurance. So they very much wanted to not have PMI, and they were considering taking funds out of a retirement IRA to be able to do that. But if you have uh, a good advocate on your side, I think you're going to really look at the specifics of that. For one, where interest rates are now, even if you include PMI, that rate is going to be substantially less than your average retirement investment that you're going to be invested in. So you might be saving, the 0.05% for the PMI, but actually in your ability to, make um, make money from interest of your investments, you might be losing like 5 to 6% by taking that money out of your retirement account. So
Exactly.
yeah.
Yeah, that's been super important. All of my financial planner friends and agree that, I mean, even buying cash for a home right now, a lot of them are, well, 100% of them are definitely discouraging that. Just, I mean, from a financial standpoint, you guys know from the strategy standpoint, but from a financial standpoint, with rates being so low, your money is really better off in the market right now. So, but yeah, it can really, once it comes down to those numbers and you can see tangible, I can take you through and look at that difference, what you need to bring into closing. Sometimes there's strategies that we can work out with the seller, um, as long as their bottom line is the same. A lot of times we can, either ask for a seller paid closing costs, some offset there to really make it make more sense, where the buyers ultimately have to bring in less money. And then we're not so focused on that private mortgage insurance, which can actually work in your benefit if you do it the right way.
I know it's based on an individual level, but what's average cost of private mortgage insurance these days?
Um, I would say anywhere from zero point 0.5 to zero point 0.8.
Mm,
So yeah,
mm,
that's a good average. As far as monthly mortgage insurance, the other option that people can have too, depending on their situation, is they have what's called upfront mortgage insurance premium. So if they know for sure they're going to be in the home for a long time, what they can do is, if they really don't want that monthly payment in there, they can pay for it upfront in those closing costs.
mm,
So yeah.
That's again working with somebody
mm.
that's really going to look at their specific situation, like yourself. That's awesome.
Mhm.
Yeah, that is really interesting. I hadn't heard of that one.
Yep.
Kind of
Yeah,
similar
thanks.
to like buying down the rate, right? Like paying
Mhm.
point up front, or
Mm,
yeah, very cool.
Right.
We had touched on back to average down payment. You said there was two primary programs that you could actually still do zero down. I would like to go a bit more in depth on VA, but one that I'm actually not as familiar with is the USDA. So, how does a consumer qualify for a zero down USDA loan program?
So the USDA loan programs, for the qualification purposes, it's the same exact as they would for any other program. The only thing that changes is what I do on the back end. So they would have to be eligible as far as qualifications. So there's income restrictions that apply, and also location. So you can go on to the USDA rural housing eligibility, type in the address that you're looking at, you can see if it's eligible or not. If it's not eligible, can't do it, hands down. But if it is, then you could potentially get and qualify for the 0% down. You do have a mortgage insurance. However, it does help buyers who don't have as much saved up to still be eligible to get into a home as well.
That's pretty powerful. That's awesome.
Yeah, it's very cool.
Yeah, that is. So for just for the USDA again, is that you said it is also based on per person, and there are income restrictions.
Yes.
How does that play into the scenario for you know uh, I guess income restrictions? Is there a cap that people can get locked out? Like say you're not eligible because you make X amount of dollars. What do you know what that is?
Yep. So I don't have it memorized, but they have income restrictions for each county. So it's
Oh,
based
okay.
off of the median area income. So for the
Mm,
entire household, for all of the adults, all of that income is considered. So
oh,
if you have a couple or even two separate non-married borrowers who are both going to be occupying the home, that's going to count towards that total median area income. And for the most part around here, I would say that's like 60 to 70,000. So, but again, it is to help people who wouldn't typically qualify for a home have more ability and capability to get into home with the minimum down payment, and also having the just the easier qualification and guidelines.
so I guess for anybody who's interested in looking into those certain specifications of income, uh, would it be best for them to reach out directly, to you or to a loan officer to find that, or is that information going to be available on the USDA website as well?
Yeah, so the information's all online. You can find it, but doing mortgages and buying a home is one of the things that you really need an expert for, because there's so much misinformation and people saying what, which, where. So I would say that the best practice is to consult with a loan officer first, figure out where you stand, because maybe USDA isn't the best choice for you. Maybe there's another program that's better for you. Net 0% down really isn't the best. So that's where having those consultations, those conversations really is helpful. And then if it is USDA that's the best choice, your loan officer will take care of all of that for you.
Sure, I know that's different for everybody. I know some people I've had clients who are interested in USDA for the 0% down, and they were like, well, we could cover the down payment, but it would just be nice to save that money, for something else once we move in to furnish or whatever.
Yeah.
So
What are you guys seeing as far as listings or buyers that have USDA? I've heard some people have a harder time getting their offers accepted with that. Is that something that you've noticed at all?
It's been a little bit since I've done a USDA transaction, so the market has picked up a little bit since that point. Uh, because you're focusing on those more rural areas in general, those pockets tend to not be as competitive. So I think that definitely helps out. Where another thing that I think that a lot of the general public doesn't know about is there are still quite a few down payment assistance programs out there. So specifically, Dane County has some pretty amazing down payment assistance programs. And I always talk about, when we work with a buyer or a seller, it really is that team mentality, and your lender and your real estate professional and the client themselves are really who become the team. And so working with the right individuals who are going to have that partnership mentality, and be able to look at the specific instance of those buyers or sellers financial situation, that's just so critical. And back to, that's why you want those experts and those advocates on your team.
Yeah, for sure. I mean, I love being able to work with lenders who are loan officers who are available and present to talk. Because there certainly are, I've experienced it where it's impossible to get a hold of the loan officer or the lender. And between myself and the clients, it's been wait a week. I've had clients waiting for 2 weeks to hear back. That probably sounds like a horror story for you, Jordann. You're thinking, oh my gosh,
Listen
right?
to
But
your real
yeah,
estate agents. Listen to what they tell you. There's a reason why you're working with them.
And
Yeah,
somebody
they
local. Yeah.
sorry, I was just gonna say that I've seen several people who do want to, stay with whoever that they originally talked to, which is great. Sometimes that works out, but I think that if we can really lean on the experts that have experience, like you guys have sold how many homes over and helped buyers buy how many homes over the past year, and you can kind of see where people are excelling and where people are really not so much. And as an agent, you are acting in your client's best interest by helping them and guiding them to the easiest, most less stressful process possible.
that's right. We all want it to be as simple as possible, and that's why we do what we do is take that burden off of anybody.
When it feels seamless, that's always my kind of indication of like you've got some good people working for you. That's the goal.
For sure.
The analogy, right? The duck on the water, where everything up top looks graceful and beautiful, but all that work is kind of happening below the surface. So
Yep. Really.
I wanted to touch on just some kind of lighthearted things. Our team and Jordann definitely have charity as one of our primary values. So, Jordann, you've got some pretty awesome goals this year. Charitable endeavors.
Yes, I do. So my goal is to have $2,000 donated to a local animal shelter. I am, don't judge me, but I'm vegan. So, and the main reason being is because I really care about animals, and I just have such a sensitive heart. And so I've fostered many animals in the past, and one of my passions is with animals. So I figured it'd be a great opportunity for me to give back to a local shelter, because if you look at the shelters online, there's so much need for money for veterinary appointments, for supplies, and even just to pay their staff. So I think it's going to be a really good way to give back. And so $20 for every family that I help is going to be donated to the shelter. And in addition, my clients will get a little certificate that shows that their loan has helped them help the animals at that shelter too. So
Nice. That's really, really, really nice thing to do and
That's
support the
yeah,
local
and
shelters. Yeah.
I think we have to have a bigger purpose in what we do, and that's the biggest way that helps me this year. It is it's giving back to animals.
it's I mean, along with so many other segments of business, small business, nonprofits have really been clobbered. So that's powerful. I really truly think that that's one of those things that separates out, again, another reason of working with somebody that's truly local. Um, Money stays here in the community. It goes farther. All of those things are pretty significant benefits. So,
Yes.
that's awesome. I commend you on that for sure.
Thank you. Yeah. Shopping, supporting local, and I think really you guys do a great job of it, is supporting the community and just being resources for each other. And there is, it may seem like it, but there is such an abundance of good opportunities that we have, especially in Madison. And so making those connections and being gracious with the things that you have, at least for me, is what I really try to focus on too. And there's not really any better place to do it. We're really lucky here.
We
For
are, yeah,
sure. Yeah.
incredibly blessed. I think even more so. I think we're seeing that more and more across the board, and consumers are recognizing that and rewarding it. I'm a firm believer. You vote with your dollar,
Mhm.
so I really see that that's where everything, all consumer transactions are kind of headed in that direction, and I'm a firm supporter of it for sure.
Yeah. Yeah, it's crazy. Not to get off on a tangent at all, but it's crazy
We love
to see, like, there's no customer service for some of these companies that are operating right now. And I'm like, I definitely, I don't know, if there is customer service, it has to be pretty good. I grew up in a small town and been in customer service my whole life, so I do a pretty good job at it.
nice.
Yeah.
Well, Jordan, we're
Very cool.
so incredibly thankful that you could join us today. I think this was the best episode ever. Is it, Justin? You think
Oh yeah, easily.
this is the best?
Well, no, it was really fun. Thank you guys for having me. I'm sure we'll have a lot more conversation, and I'd be happy to answer any questions that might come up too.
We'll put
Fantastic.
everybody's contact info in the comments of the video when we post it. Always appreciative of your time and your amazing resourcefulness. You're one of the more, truly, truly one of the hardest working loan officers out there, and just very creative and truly an advocate for your clients. So thanks so much for your time. We're really, until the next time, everybody have a fantastic 2020 here. Let's get things kicked off right. So,
All right. Yeah. Thanks again.
Yeah, thank you guys. Yeah.
Yeah.
thanks for watching. We hope you enjoyed the content. If you know someone who might benefit from it, be sure and share it with them. And be sure and follow us on all of the social media platforms. We're on Facebook, Instagram, LinkedIn, and we have a YouTube channel.